Hyundai Motor India IPO details, subscribed 42% on Day 2-1. Day 1 IPO subscribed 18%. Closes October 17. 2. Day 2 IPO subscribed 42%. Listing on October. Price band, Rs 1,865 to -1,960 apiece. 4. Investors can apply for a minimum of 7 shares and its multiples thereafter. 5. Hyundai looking to raise Rs 27,850 ever IPO in Indian markets. 6. The IPO is entire offer for sale OFS of 14.21 crore shares. 7. The 35% portion retail investors so far subscribed only 38%, still leaves 62%. The 15% portion reserved for non-institutional investors NIIs saw a subscription of 26%, still 74% open for subscription. 9. The allocation for employees was booked 1.31 times. 7.78 lakh shares with 10. The 50% quota set aside for qualified institutional bidders QIBs saw bids to the tune of 58%. Facts of Hyundai Motor. 1. Set up nearly 3 decades ago. Incorporated in 1996. 2. Zuki in 2003. 3. Weighted average cost of share for Hyundai was Rs 10 per share. 4. Share being offered at Rs 1,960 represents a value addition of 195 times or 19,500%. Currently 17.5% stake which is being offered now. 6. HMIL still has 7.5% stake which needs to be offered within next 3 years. Intro about the company. China-based Hyundai Motor India is a part of South Korea's original equipment manufacturer OEM in the world based on passenger vehicle sales. It manufactures and sells four-wheeler passenger vehicles, including models such as sedans, hatchbacks, SUVs, and electric vehicles EVs. Grey market price premium. 1. The grey mild rebound on the second day of bidding. 2. The company was commanding a premium of Rs 60 to 65 in the unofficial market, suggesting a listing pop of merely 3%. 3. The GMP stood at Rs 45 on the day 1 of the IPO. Review by brokerage houses. Positives. 2. Suggest subscribing for a long-term, citing its sound financial record. 3. Strong brand recall. 4. Expansion plans. Firm market share. 6. Focus on premiumization of the products. 7. Motilal Oswal with subscribe for long-term. Tag 8. HMIL is 9. Third largest PV player internationally according to sales volumes X in Indian markets for almost 3 decades. 11. Equal penetration in rural and urban markets, as updated by LKP Securities. 12. IIFL Securities said that the company's valuations are attractive relative to other listed OE. Subscribe rating to the IPO. Given the steady growth prospects amid industry tailwinds and strong financials. 14. SBI Securities tagged subscribe for long-term rating for the issue, saying, the capacity expansion at Talegaon will help HMIL in ramping up both domestic and export volume. Aggressive pricing. 2. Depleting cash reserves. 3. Large issue size. 4. Potential stake sale in future. And 5. Complete offer for sale nature go against it. 6. A potential weakness in the PV. Inventory levels at showrooms have risen from 28 days to 70 days, indicating a potential imbalance between supply and demand. 7. The price of share may not surge much as chances of full allotment due to large IPO size is possible. No excess. 8. Stocksbox has suggested, hefty dividends to the parent company has led to depletion of cash and bank balances, leading for expansion of Rs 32,000 to be debt funded. Expansion plans. one key beneficiary of growth in the PV segment due to its 2 plans to launch new models in the EV space, will give a strong fight to its rivals. 3. Planned an overall capex of Rs 32,000 crore to develop capabilities in EV and increase overall manufacturing capacity by 30% over FY 23-32. Anchor's 8,315.3 crore from 225 anchor investors by allocating 4.24 crore shares to 225 funds at Rs 1,960 apiece. Financials: 1. HMIL reported a net profit of 5 crore. 2. Revenue of Rs 17,567.98 crore for Q1 FY25. 3. Reported a net profit of Rs 6,060.04 crore year ended March 2024. 4. 302.33 crore for the year ended on March 31, 2024. 5. HMIL should trade at 26 times, which is a fair value as compared to peers, at its upper band price of Rs 1,960. It added with a subscribe for long-term for Maruti Suzuki India is 4.79 times, while it is 13.11 times for Hyundai Motor India. This reduces the margin of safety despite Hyundai's better return on equity ROE, said Amar Nandu, research analyst, Samco Securities, who called the IPO. Kotak Mahindra, JP Morgan India, Citigroup Global Markets India, HSBC Securities and Capital Markets and Morgan Stanley India are the book-running lead managers of the Hyundai Motor IPO, while KFin Technologies is the registrar for the issue. Shares of the company 22nd, Tuesday as the tentative date of listing.